In an era where change is the only certainty, our global landscape is continuously reshaped by economic pressures and geopolitical events. Global inflation is surging, with the U.S. witnessing its highest rates in decades, which has led to the U.S. government printing more worthless money and debasing the dollar, while Europe faces similar challenges. Mortgages and other interest rates are at historic highs, which is suffocating the housing and business markets. These economic shifts are intensified by efforts to challenge the dominance of the U.S. dollar as the primary international currency, creating destructive ripples across the global financial system. Geopolitical tensions are escalating. The persistent and deadly war between Israel and Hamas adds to the instability in the Middle East, and in Asia, the looming threat of China's potential actions toward Taiwan raises concerns about regional security and its global economic and even technological implications. Closer to home, the United States grapples with numerous complex domestic challenges with seemingly no ethical or capable leadership to resolve them. The southern border faces unprecedented pressures from the influx of millions of illegal immigrants, while the labor market shows signs of dramatic slowing, raising questions about the future of domestic employment and economic growth, while civil discourse and unrest are more unhealthy and even violent than I have ever seen them in history. Amidst this backdrop of global unrest and economic shifts, the stock markets careen with uncertainty, reflecting the collective apprehension of investors worldwide. In these challenging times, securing your financial well-being is not just a goal, but a necessity. It's about navigating the complexities with knowledge and foresight. Join us as we explore the essential strategies and insights you will need to safeguard and enhance your financial health in this era of global upheaval. This is Prosper and Create Wealth's special report, Navigating Uncertainty, Securing Your Financial Wellbeing in Today's Turbulent World. High inflation rates, like those in the United States and Europe, erode the purchasing power of individuals and businesses, making everyday goods and services much more expensive and affecting global supply chains. This strains household and corporate budgets, especially for those with fixed or low incomes. The U.S. government's response to economic challenges, including printing more money, leads to the debasement of the dollar. This decreases its value and undermines global confidence in the dollar as the world's reserve currency. Higher mortgage and other interest rates, while aimed at curbing inflation, suppress economic activities. They make borrowing more expensive for individuals and businesses, impacting the housing market and hindering business expansion. Ongoing wars, such as between Israel and Hamas and Russia and Ukraine, contribute to global instability. This disrupts global oil and food supplies and affects global markets, given the Middle East's role in energy production and Ukraine's traditional role in agriculture. The potential for conflict over Taiwan involves not only regional but also global economic and technological implications. China is a major economic power, and any conflict could disrupt global supply chains, particularly in technology. Taiwan is responsible for a significant portion of the world's supply of semiconductor chips, with estimates often suggesting that Taiwan Semiconductor Manufacturing Company, TSMC, alone accounted for about 50 to 53% of the global semiconductor foundry market. TSMC is a key player in the advanced semiconductor manufacturing sector, producing chips for pretty much all major international companies. It's important to note that while TSMC dominates the foundry market, the overall semiconductor supply chain is highly globalized, with different stages of production and raw materials sourcing happening across various countries. However, the prominence of TSMC in this sector underscores the strategic importance of Taiwan in the global tech and electronics industry, among many others. Potential damage to TSMC's foundries in a conflict with China would not only be a disaster for the semiconductor industry, but would also have incredibly broad implications for the global economy at large, technological progress, and international relations. The influx of millions of illegal immigrants at the southern border in the U.S. presents logistical and humanitarian challenges. It also becomes a polarizing political issue, potentially diverting attention and resources from other pressing economic concerns. And a slowing labor market can lead to higher unemployment rates, affecting consumer spending and overall economic growth. In fact, in August of this year, national hiring experienced a significant decline of over 23% compared to the same month in 2022. This underscores the ongoing challenges confronting the labor market as it strives to recover the level of strength observed before the disruptions caused by the pandemic. Increased civil unrest and polarized discourse create an environment of uncertainty and instability, affecting both the economy and the sense of personal safety. Diverse but interconnected factors contribute to an environment of heightened financial risk and personal insecurity. They reflect the complexity of balancing economic policies, managing geopolitical relationships, and addressing domestic challenges in an increasingly interconnected and polarized world. So, we live in a pretty scary time, and depending on where you live, the local political and economic environment can be even more dicey. It seems that large urban centers are at the greatest risk in times like this. So what can and should we be doing on an individual basis to survive and hopefully thrive in these difficult conditions? I think the first thing we can and should do is to revisit our budgets. Budgeting and living within our means are foundational principles. Our financial stability and growth, especially in uncertain times, depend on. By spending less than we earn and allocating the difference to savings and investments, we can build a financial buffer against unforeseen events and work toward long-term financial goals. Here's how to achieve this and some tips for effective budget management. First of all, regularly and consistently spending less than we earn ensures that we're not living paycheck to paycheck, reducing financial stress and vulnerability to emergencies. This helps prevent accumulating debt, especially high interest debt, like credit card balances or any kind of consumer debt, which can quickly spiral out of control. And by the way, I encourage you to include vehicle debt in this category of unnecessary and unwanted debt. By saving and investing a portion of your income, you're actively working toward financial goals, whether it's retirement, a home purchase, or education funding. And in unpredictable economic times like these, having significant savings and investments gives you a cushion to fall back on, making you less vulnerable to market downturns or job loss. Now let's talk about how you can shift your spending habits to help you get back in control. Start by understanding where your money goes. Use budgeting apps like Mint or simple spreadsheets to track your income and expenses. List all sources of income and all expenses, including periodic ones like insurance premiums or annual or quarterly subscriptions. Divide your spending into essential. This might be things like rent, utilities, groceries, and non-essential, like dining out or entertainment, categories like trips. Based on your income, set realistic limits for each category. Essentials should be prioritized, and non-essentials should be trimmed as necessary and reallocated intelligently. Focus on necessities. Luxuries and discretionary spending should be absolutely secondary at this time. One of the smartest things you can do is to set up automatic transfers to savings accounts and investments each pay period, treating savings like a non-negotiable expense. Remember, always pay yourself first. I recommend that you use the 50-30-20 rule. Allocate 50% of your income to needs, 30% to wants, and at least 20% to savings and debt reduction or repayment. Pay off your high-interest debts and make this a priority. This reduces the amount you'll pay in interest and frees up more money for saving and investing. Then, build an emergency fund to cover at least 3 to 6 months of living expenses. Regularly review your budget and adjust as your circumstances change, because this certainly will. Shop intelligently. Look for deals, use coupons, and purchase in bulk where you can. It will save you money. Regularly review and eliminate any subscriptions or memberships you no longer use, need, or want. If you can, increase your income. Consider side hustles or part-time work to boost your income if possible. Once you have a solid savings buffer, consider investing in a diversified portfolio to grow your wealth over time. Investing is a key strategy for growing wealth and ensuring financial security, especially in the face of inflation and currency devaluation. Here's an overview of various investment options and the principles of diversification and risk management that you can follow. Investing in company shares in the stock market offers potential for high returns through price appreciation and dividends. However, stocks can be volatile and can carry higher risk. Bonds are fixed income securities where you lend money to a government or corporation or a municipality. They offer regular interest payments and are generally less risky than stocks, but typically have lower rates of return. Investing in property can also provide income through renting and potential appreciation in value. Real estate markets can be less volatile than stock markets, but require more capital and management and possibly debt. Precious metals are often considered a safe haven asset, tending to retain value during market turmoil. However, they don't offer dividends or interest. Bitcoin or other cryptocurrencies, digital assets, offer high potential returns, but are extremely volatile. They're a relatively new asset class and subject to regulatory changes that the government's currently considering. Mutual funds and ETFs pool money from many investors and invest in a diversified portfolio of stocks, bonds, and other assets. ETFs trade like stocks, offering ease of trading and diversification, and minimize risk. Diversification involves spreading investments across different asset classes to reduce the risk of significant loss. Your investment mix should align with your financial goals, risk tolerance, and your investment horizon over time. Continuously review and adjust your portfolio to maintain appropriate diversification and address changes in market conditions or your personal circumstances. Now let's talk about how you might beat inflation and currency debasement. Aim for investments that historically have offered returns exceeding the inflation rate. Stocks and real estate often provide such returns over the long term. But in the case of real estate, you will need to consider the implications of taking on debt to acquire real estate at unusually high interest rates right now. Investing in assets not directly tied to performance of the dollar, like certain international stocks, precious metals, or cryptocurrencies, might serve as a hedge against dollar devaluation. Dividend-paying stocks, bonds, and real estate can provide a steady income stream, helping to offset the impacts of inflation and the current debasement of the US dollar. Investing wisely requires balancing the potential for higher returns with the risks involved. Inflation and currency devaluation are important considerations, making it crucial to choose investments that not only grow your wealth, but also preserve your purchasing power over time. A well-diversified portfolio tailored to your financial goals and risk tolerance is key to effective investment strategy. Engaging an ethical and trusted financial planner or CPA can be super helpful in making these decisions. Living within your means and saving a portion of your income is a sustainable approach to financial well-being. It requires discipline and continual adjustment, but the peace of mind and financial security it brings are invaluable, especially in uncertain economic times like these. Staying informed about financial news and trends and knowing when to seek professional financial advice are critical components of effective financial management. Understanding current market conditions, economic indicators, and financial trends helps in making informed investment decisions. Markets are really volatile, and economic conditions can change rapidly. Being informed allows you to adapt your investment strategies to the current realities in the market. Regularly following financial news helps you identify new investment opportunities and potential risks, enabling timely responses. Economic forecasts and trends can influence long-term financial planning, such as retirement or estate planning. Awareness of current financial scams can also protect you from potential fraud. Here are some sources you might consider for financial information. Websites, newspapers, and TV channels focused on financial news. However, be aware that most of these have a pretty obvious political perspective that they will promote, so take what they say with a grain of salt. Government and international organizational reports on employment, gross domestic product, inflation, etc. However, even these sources cannot always be trusted. Reports and analysis from investment research firms are often fairly objective. However, you may need to pay for information from these sources. You might also check out online forums like Reddit, YouTube channels like ours, podcasts, and blogs. Though these can offer great insights, they should be approached with caution and cross-referenced with other reliable sources. It's also helpful to think about how to seek professional financial advice. If your financial situation is complex, involving various assets, income streams, or international elements, professional advice is crucial and a super good idea. Events like marriage, childbirth, or retirement necessitate a financial plan review and possible adjustments to your plan. And remember, if you don't have the time or expertise to manage your finances effectively, a professional can help with detailed investment planning, including portfolio diversification and risk management, and to navigate complex tax laws and estate planning. When choosing a financial advisor, remember to check their qualifications, certifications like CFP or CPA, and their experience. Ensure that they have a fiduciary duty to act in your best interest. Take the time to understand how they're compensated. Are they fee-only or commission-based? And some advisors specialize in certain areas like retirement or tax, etc. Choose one that fits your needs specifically, and always check their references and reviews to gauge their reputation and reliability. Staying informed about financial news and trends equips you with the knowledge to manage your finances proactively. However, there are instances where the complexity of financial decisions or specific life circumstances warrants the expertise of a professional financial advisor. The key is to recognize when you can handle financial decisions independently and when it's prudent to seek professional guidance. In a world brimming with uncertainties, one thing remains within your control: your financial future. It's time to take the reins to transform challenges into opportunities and uncertainties into a canvas for your financial success. Remember, securing your financial well-being isn't just about weathering the storm. It's about setting sail toward a future of stability and prosperity. It's not just about surviving, it's about thriving. You can start small if you must, but create a budget, track your spending, save a little from each paycheck. Step by step, you'll build not just a safety net, but a launch pad for your dreams. Whether it's buying a home, securing a comfortable retirement, or funding an education, your goals are within your reach. Stay informed, stay agile. The world of finance is dynamic, and knowledge is power. Equip yourself with the latest financial news and trends. Understand the global forces that shape your finances and risks, and adapt with confidence. And remember, you're not alone in this journey. Seek advice when you need it. Financial experts can offer you the guidance to navigate complex decisions and tailor a plan that suits your unique path. Today, we stand at the threshold of tomorrow. Let's embrace our financial futures with open arms. Let's be proactive, be wise, be bold. Your financial well-being is the foundation of your peace of mind and a testament to your resilience. So take the first step. Chart your course. The future is not just something that happens to you. It's something that you can create, and it starts right now. You've taken the first step by joining us today in this video, but this is just the beginning of your journey to prosperity and to real wealth. If you're committed to transforming your financial future, to building wealth that lasts, and to navigating the complex world of finance with confidence, then our Prosper and Create Real Wealth channel is your go-to resource. Don't miss out on the wealth of knowledge waiting for you. Subscribe now. Tap that subscribe button and turn on notifications. Be the first to access our latest videos, filled with invaluable insights, tips, and strategies to protect you and your family. Join our rapidly growing community. Share your journey. Learn from others and be part of a network that's all about making smart financial decisions and building real, lasting, multidimensional wealth. And there's more. Follow us for regular updates and exclusive content, whether it's mastering the art of investing, understanding market trends, or unlocking the secrets of financial freedom. We've got you covered. Looking for more? Check out our curated playlists and recommended videos and our podcast right here. Dive deeper into topics like retirement planning, debt management, budgeting, and wealth building strategies. Your path to financial success is unique, and we're here to guide you every step of the way. Prosper and Create Real Wealth is not just our name, it's your future. Remember, wealth isn't just about money, it's about freedom, security, and the power to live your best life. Subscribe, follow, and let's embark on this journey together.